Profit after tax is up 77%, and we've adjusted in this impairment charge that we've taken. EBITDA has expanded by 4 percentage points at 767 crores, and this is, I believe, other than the quarter where we had olanzapine, the highest EBITDA that we have in several quarters in the past. This has been led by a significant number of launches across our territories, whether it's the US, Europe, India and emerging markets, and there's very good momentum on new product launches and market share capture. As a snapshot, the key financial highlights are given, and you can see revenues are up 27%. In the first half, it's up 28%. Profit after tax is up 77%, and in the first half of the year, 56% over the previous year. So very good momentum, strong momentum, and we're hoping that this continues into subsequent quarters. If you look at the territory-wise on global generics, before we go to global generics, as I mentioned, PSAI grew 33%, and we'll take a dive into the global generic territories, and you can see across most of our core markets, there's been very strong growth. The US has grown by 47%, India has grown 12%, and on a first half basis, India is reporting 15% growth, and so it's back on track with market. Russia and CIS has grown 14%, and this growth would have been a lot higher had it not been for some amount of delay in the season offtake that's happened. So Russia's season is finally kicking in as we speak, but it's been a little delayed. The rest of the world, across markets, very, very strong and good momentum growth. Talking about the US and 47% growth, we've been beginning to get market share on several of the products that we've launched, whether it was atorvastatin. We've increased our market share on tacrolimus, and as the table shows on the right-hand side of the slide, there's very significant market share capture across the products that we call limited competition, and we're very pleased with that. Our pipeline looks very good, like it was before, with almost 33 para 4s and 7 first to files. Moving on to Russia, as we mentioned, not one of the best quarters for Russia, but on a first half basis, if you look at the numbers, it's up 25% still. So we had a very good quarter one, and the season is, as I mentioned, just kicking in. The good thing is, if you look at the OTC revenues on the right side, and this was one of the key things that we had put out as a management team to diversify the business model in Russia, that's shown very strong growth. It's grown up by 50% just about 3 years, from 3 years back. Growth's largely driven by our existing mega brands, as well as the fact that we've seen the OTC traction. And the market rank is 13th. It was about 16th or 17th about 4, maybe 2 to 3 years back. So continued sustained momentum across this market. In India, the first half growth is 15%, and I think at the beginning of the year we said this year is the year when we'll make India come back on track with market growth, and that's happened if you look at the first half. And this quarter has been a little slower on account of the base effect that we had in the previous quarter, but the general momentum of the business looks good, and we're looking at India coming back at market growth rate in this year. And of course, the growth's driven by our mega brands doing well, as well as the fact that there have been new launches this quarter. Europe, we had a decline in growth, and this is like we had even in the first quarter. This is more or less now becoming the pattern in this territory. We'd at best have flat or slightly marginally higher growth because of the price erosion. But what we're trying to do is launch several new products in the market, and you can see a list of launches that we've done in the first half of the year.